Eric Mwathe with Mwathe.com. Just want to point out something here, and it is what to do whenever there's a pullback in the market. Now, right now, I'm recording this video June 15th, 2015. Market's been trading well since 2009. So pretty much since 2009, we have been on a steady staircase higher. Right now, we are seeing a slight pullback. So this video is to show you when you should be aggressive. Now, in theory, and it is a theory, you want to be aggressive during these periods here, during a pullback. Now, of course, when the market is pulling back, you don't know that the market is going to bounce or whether the market is actually beginning a fresh move that is eventually going to break out or break down. All these have the risk of breaking down if the market did not hold stability or did not hold support. So right now, we are looking at another situation where, as of right now, over the last couple of weeks, market's been pulling back, and we have an opportunity here that maybe this is a beginning of something different, and now the market could start going into a correction or into a bear market, or conversely, that this is another situation where the market could bounce. Now, our job is to find out if there is any chance that this could be a possibility for a bounce. Of course, it is always a risk, but the point here is you want to be aggressive during a pullback. And how do you be aggressive? By finding stocks that are breaking out to new highs while the market is in pullback mode. So if you can find a stock that's breaking out above previous resistance levels, for example, previous weekly closing highs or monthly closing highs, stocks that are breaking out when the market is on pullback mode tend to do very well if the market finds stability. Right now, we are looking at the market having opened this morning. At some point, the Dow was down about 190 points coming off the lows. I show you why right now I think traders can start sniffing out some positions on the long side, because if you take a look at the chart for the VIX on the hourly, and the VIX has been a very good tail over the last 1 or 2 years, every time it comes back to this resistance level, and I've been talking about this over the last couple of years, on the hourly, every time the VIX has been coming back to this level, it's been stalling. We are seeing at the market lows of the day, Dow down about 190. We see that the VIX hit that level and is showing a little bit of a pullback. So somewhere around here, for example, as an example, is where one would start finding opportunities to go long. So you want to be aggressive in a bull market when stocks are trending higher. So in a bull market like the one we've been in since 2009, market's been going in this type of fashion. So all these pullbacks, one needed to be as aggressive as possible, and that is how you can own leadership stocks. At some point, this market is going to turn around, and we are going to start some type of a staircase down. And if that's the case, then the job would be to figure out where the market is going to be moving higher short term before it pulls back to a deeper correction. So if the market turns around, our job is going to have to be finding out where we can go short after every shallow rally. So if we can find out these opportunities, we can go long. For now, since the market has yet to give us a strong bear market indication, and we are trading in this steady step higher, we are right now coming back to what could be considered another pullback zone. Of course, we don't know whether we go higher or whether we go lower, but our job for now is to figure out if this is where we go long. And I think that VIX hourly is indicating that more than likely around here the market could find stability, and this is where we need to be aggressively looking for breakout or stocks that could rebound if the market rebounds. Eric Mwathe with Mwathe.com. Good luck, peace, and blessings. Woo! EICS.